Hi and good morning, traders. It's Monday, 16th of April 2018. Like every business day, welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe one or two questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with a disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account and make yourself familiar with leverage trading, long trading, short trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down on our page. This is me. My name is Jens. I'm talking from the Berlin office, the German office from Admiral Markets. We are a big international broker. We have 18 country offices, so I'm the German guy. My English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today, and this is our scheme. On Monday, like today, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Zinat's Day. And on Friday, it's Dirk's Day. Our leading day traders live every trading day, every business day. Yeah, and of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller, DAX 30, the German DAX index CFD typical spread of just 0.8 points to the main trading hours, tradable by mini lots from 0.1 lots, MT4 or MT5, it's your choice, and great safeguards like our negative balance protection policy. Check all that out on admiralmarkets.com. There you will find also something about our regulatory background and how to contact us, call us, send us an email, or visit the other channels. Usual, all the webinars will be recorded and a couple of hours later available on our YouTube channel like displayed here. So thanks for listening to me, and enough from my side. Now it's time for Jay. Hi, good morning, good day, Jay. What's your view to the market today? The voice is yours.
Good morning, Jens. Good morning, traders. Let me share my screen with you all. I hope you all had a fantastic weekend. We have beautiful weather over here in Germany. So rock and roll into the summer. Let's make some money and then off to very beautiful vacation places, hopefully. Last March, end of March, we still had a Kiwi trade open and we got triggered on all three positions. And so we had a pretty good winner there. On the backhand, we still have a Euro-Aussie trade open, and that is to be seen. We'll update you next week. It's still open. Headlines to start. Dollar US yield curve is still going flatter and flatter. That is a caveat. Why? Because if the Fed overdoes the yield tightening, then the curve could invert, and then historically we have round about a year into a recession. Those are historic norms. We'll have to see each recession or economic downturn plays out differently. But the 2 years at a decade high, and this week the US Treasury is going to ask the primary dealers, because we have a 5-year Treasury inflation protected auction of notes. They're going to ask the dealers if the Treasury could increase the supply of 5-year inflation notes in the second half of this year. So as alluded to several times over the past few meetings, the US is increasing the amount of money that they need to borrow. Hence, don't be stupid and upset China too much. They are the largest foreign holder of US debt, as are Japan, ranking number 2, and both are reducing their holdings. Strength versus weakness this morning. As we can see, we had some strength in the Japanese yen overnight and some weakness in the Canadian dollar. Very high correlation to oil, and oil sees some profit taking into a very, very positive geopolitical drive higher into top edges above $67 per barrel on WTI, but we're back into and below that level now as expected. Also expected, we saw the launches of some Tomahawk missiles from US, UK, and French forces into Syria. There was a mission accomplished tweet by Donald Trump. 3 targets were hit. Most of the missiles launched were intercepted by Russian defense forces helping the Syrian government and Syrian forces. But, and that's important, why the risk sentiment may turn later on towards more positive tone, there were no major escalationary words from Russia. So not as bad as potentially could have played out. Data this week, we have core retail sales in the US and retail sales expected slightly better. We have a host of Chinese data in terms of economic growth. All eyes will be on that as another growth engine for economic growth globally. And we have the monetary policy meeting minutes out of Australia. Then on the sterling side, we have average earnings index expected to increase slightly. We have a claimant count change and unemployment rate. And then we have building permits leading economic indicator out of the US. And then towards the second half of the week, we have again sterling data, CPI and PPI. PPI expected to increase slightly. So some inflationary pressure potentially to be seen here. We'll keep an eye on that. And then we have out of Canada, the rate decision for this week expected to hold unchanged. I'll tell you in a second when the next rate hikes are expected and priced into the market. We also have a monetary policy report coming out. So that's going to be useful for us because economic growth in the first quarter of 2018 after a stellar 27 economic growth year in Canada has come in a slightly weaker. So all eyes will be on the Canadian economy there. On Thursday, we have Aussie dollar employment change and unemployment rate that's ticking in below 2017 average. 2017 average was 34K added monthly. So we're still inside of that, but it is expected, so not to worry. CPI expected to uptick out of New Zealand. We could see some strength into that number into Thursday for the New Zealand dollar. Then we have unemployment claims, and we have Friday, we have CPI out of Canada, core retail sales. That'll be also interesting, especially after the monetary policy report on Wednesday. So let's get into the numbers. Computer is acting up again. Dollar. Sorry for the delay, guys. My NAS is backing up exactly when we do this morning meeting. That's horrific. Retail sales, as said, slightly better than expected, better than last time. Expected better than last time, sorry. And the tick long-term purchases will come out also today, later in the day. $62.1 billion last reading. And what is the tick data for those who missed it last week and the week prior, where I explained it? The tick data represents the balance of domestic and foreign investment in US debt. For example, if Chinese and Japanese investors purchase 100 billion in US stocks and bonds, and the US purchased 30 billion in foreign stocks and bonds, the net reading would be 70 billion. Yes, it also includes stocks. What's important for us is a higher tick data than expected is positive for the US dollar. That's one. And two, with the trade spat between China and the US, are they decreasing the amounts that they're purchasing in terms of treasuries? That's quite important. Last month, tick data showed Chinese holdings of treasuries fell to a 6-month low. Tuesday, building permits, 1.33 million expected, so that's all ticking up nicely. It's all good. And a host of Fed speakers this week. So for all of you who day trade, that may be of interest. We could expect some volatility there. Canadian dollar, rate statement, monetary policy export report. Market expects rates to stay steady at 125. And this is important now. The market expects the next rate hike in the third quarter plus 25 basis points, and then another rate hike in the fourth quarter, and then to leave the rates at 175 towards the end of this year. If the data comes out differently, for example, inflationary expectations would be ticking up due to higher inflationary CPIs, as an example, or wage growth, average hourly earnings would be ticking up, for example. There could be a money market reaction, and that could lead to Canadian dollar strength. Watch for comments about wagers. This is what the Bank of Canada is taking a closer look at. Paulos, its governor, recently emphasized that there's still slack in the labor market. And the policy report here, we will look at the growth in Q1 because it came in lower than expected, but the inflation data was encouraging. So overall, we expect a hawkish tone for the survey. Recent business surveys were also upbeat. On Friday, the CPI headline is expected to rise by 0.5%, and that takes the year-on-year rate to 2.6%, which is the highest in 6 years. That is why we said there were some encouraging inflation data. It's all about GDP growth and inflation. That is the name of the game. The bank who nails the GDP growth forecast and the inflation forecast makes the most money. Pound, Tuesday average earnings, 3-month annualized 3% versus 2.8, and ex bonuses 2.8 versus 2.6. So we are seeing an uptick in average earnings. Wednesday CPI expected to remain in line as last time, 2.7%, and the core slightly upticking by 10 basis points. Of course, and ex food and gas, for example. Market expects a hike in May. Our job as traders in the currency market is to know when each central bank is expected to hike or lower rates or switch their gearing next. That is our job. And then our job is to follow the economic numbers, because that drives the big money, the long-term investors. Thursday retail sales minus 0.5 versus 0.8, but Capital Economics alluded to the fact that it could come in better due to stronger pay growth and lower shop price inflation recently. So there may be a surprise here, and if it does come in better, then day traders can potentially catch an upticking pound and make some pips that way. Next slide, and then we're done on the fundamental side. Tuesday monetary policy meeting out of Australia, the minutes. So next rate move seen as up rather than down, but no near-term adjustment needed. Then also watch for comments on international trade and elevated funding levels. This morning there was a Bloomberg story that said that Australian banks are expected to having to sharpen their lending standards for mortgages, new mortgages, and that may decrease the availability of credit, and that would be a negative development, because the RBA is already looking at the housing market as a sore thumb to them. Okay. Not a good development. As so often, banks got greedy and handed out credits with lower credit standards. You can Google it, quite a good research piece. Wage pressures need to increase before the RBA is expected to tighten. So focus on housing market, but also on wage pressure. Thursday employment change 20.3 versus 17.5. I already said last year the average was 34K, and the unemployment rate expected at 5.5 versus last time 5.6. So all good on that front. Kiwi only CPI expected to tick up. That's going to be good for the Kiwi. And then on the yen side, also seems to be a CPI week this week. We have national core CPI expected at 0.9 versus last time 1.0. Headline inflation reached a 4-year high last month. Please recall, Japan is hoping for 2% inflation. I'm saying hoping because they tried for decades now to reach that target, and it has eluded them always. But Japanese companies have increased wages by an average 2.4% for this year, which is the largest increase in 20 years. So finally, on average, the Japanese worker had, for the first time, an increase in wages. That's good. It's an inflationary pressure. We'll have to see if it feeds through into core CPI as well. China, Tuesday GDP 6.8 versus 6.8. First quarter growth is expected to come in at 1.5%. Watch for a cooling housing sector in China as well, and we expect lower manufacturing demand, and we have the trade wars on the radar always. Over to positioning. What do the big boys tell us in terms of their futures market positioning and derivatives volatility and pricing? Commitment of traders, Aussie on its way to a potential long. I like the Aussie long, especially versus low carry and cheap currencies like the Japanese yen. But I do have to struggle with risk on, risk off as money flows into the Japanese yen in a risk off scenario. Usually it also flows into the Swiss franc, but the Swiss franc diverged last week in a risk off sentiment. Why? Because the US hit Russian oligarchs oligarchs with sanctions. And these sanctions caused some of the money that Russian billionaires hold in Swiss assets had to be withdrawn. So that led to some of the larger Swiss stocks tanking, and to the Swiss franc tanking had to be sold. Interesting fact, on the side, Bitcoin rose. So there could be a linkage there where some of the money was repatriated back to Russia, potential margin calls and money needed, but also into this new asset class away from government sanctions, i.e. Bitcoin. Quite interesting. So for this Monday, I expect the ruble to tank again. If the ruble tanks, I expect the Turkish lira to tank. I'm watching for continued weakness in the Swiss franc. And I'm also watching for further weakness in, for example, Rusal stock, the aluminum producer owned by a Russian oligarch. Okay, Canadian dollar long, pound short, and yen short. These are all longer term plays. These positions, if you play them via options, for example, can move against you for a few weeks, but then they're all expected to work out just fine. Volatility, euro coming off a little bit, pound on a weekly basis increasing a little bit, yen coming off a little bit, and the VIX coming off from 21.5, excuse me, down to 17.41 closing. And I'm looking over, we'll have to see, it's dropping still. Good, 17.3 as we speak. Option pricing tells us euro, dollar, and silver long for Monday, and gold short for Monday. I know some of you are looking, having a closer look. These, for example, always looking at the gold-silver ratio. Option flows indicate bullishness on Monday for pound, Swissy, and gold, and bearishness for Aussie, Canadian dollar, euro, and yen. Wasn't quite easy to find a trade for this week, but before we leave the positioning, read this. Investors are the most bearish on US dollar in more than 5 years, as you can see here. Good story on Bloomberg and Reuters. So if they're bearish, that means the dealers are long, so expect $8 long down the road. Potential bottom edges in dollar yen, for example, something you may want to take a look at. Potential trade for this week, nothing to execute right now. I'm waiting for the second half of the week. I want top edges in pound versus the potential Aussie dollar. Pound, why? I'm looking for data-driven move higher, a squeeze into top edges into Thursday, because with average hour earnings and CPI expected to come in better, but then we have a buy the rumor, sell the fact. There's an arm missing on Thursday on the CPI. I think it was on the retail sales. So this is a anticipated move by the pound on my side, and then on the Aussie dollar, there's positive data expected for Thursday, and we have encouraging cut data positioning by the big boys. So this is something where I'm looking at top edges in pound versus Aussie dollar to short into. My trade structure will be at least 2 sell limit orders going into the short, as I'm looking to build a position that is also carry positive once I enter into it. My risk for the trade is positive Brexit headlines this week, as negotiations with the Europeans will be picked up again, and or bad Aussie dollar drivers, either sentiment, Chinese data, or flows. If you take a look at the chart, we've been trading in a box, and I expect the upper edge of the box to get tested one more time and then to be rejected back into the middle of the box or bottom edge. Easy peasy, nothing difficult. Trading should never be difficult. Don't ever, ever, ever feel like you need to push the button. If you're a day trader and you're pushing the button without proper planning, then you're going to get a piss poor result. And it just means that the market makers and the algos tricked you into getting into a position that you didn't think about properly ahead of time. Always plan your trade and then execute your trade plan accordingly. Please don't ever, ever, ever push the button without having a proper think and an institutional process before you hit buy or sell. Thank you very much for your Monday morning attention. It's great talking to you guys. Jens, thanks for the opportunity as always. Have a wonderful week. Enjoy the sun and make a lot of money, hopefully. Thank you very much. Bye-bye.
On the weekend, I found a new slogan and I could imagine it could become directly from Jay. Train hard, fight easy. That's also for the trading market. That's my 5 cents for today. Tomorrow is another day. So tomorrow, same time, real-time daily trading ideas with a different day trader. Everybody has a different trading style. So just check it out for tomorrow. Thanks to Jay. All the best from Berlin office. Bye-bye.
Thank you, guys. Bye-bye.